All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm jumping on here just a little bit early. A lot of stuff to look at, and so want to jump on and do that here. Market's been open now for about 50 minutes, and we are looking at a market that's a little all over the place, in terms of the pre-market action, but very, very flat overnight, which we come to expect. And then we had the ECB release their statement, or European Central Bank. They released their statement. We saw about a 5-point rally, right, in S&P futures, and they pushed up to a new short-term high. And then we saw the Mario Draghi press conference. Okay, and while the press conference was going on, we saw S&P futures, really slide. And slide aggressively, and then U.S. equity markets open, and they slid some more. But 30.28 down to 30.04, about a 24-point move, which is not a percent move. So we are still put a little context there. We're not talking about monster moves, but still a significant move. Here in the market, we did see early on we saw sectors like banks outperform and hold up, and home builders, but we've seen a little reversal of that. We've saw stocks like Caterpillar really lagging, but seen a reversal of that. American Airlines opened up higher, is reversed on down, and as it sits, the market's down about 11 points. Has anything materially changed? No, not at all. Not at all. It's one where, look, S&P 3000, it's right here. Are we going to hit that again? Probably. Are we going to be around S&P 3000 for the foreseeable future? Yep. Probably. And it's just one of those where the story of the market, is pretty much the same here today as what it has been. Now, one thing that is a little kind of changing and, does kind of catch investors watching here are bonds, right? Bonds have been in this consolidation mode for 2 months, right? Absolute consolidation. They tried to break out, they failed. They tried to break down, they failed. And they've been absolutely consolidating. If bonds do break on down, that's likely to lead to some selling in equities. And, you say, well, why would bonds breaking down lead to sell in equities? That's good for the banks, good for small caps. And you're right. We see those groups outperform. But, bonds are that linchpin right now of investor expectation of Fed rate cut. And it's just one of those scenarios in the market right now where the market wants a rate cut. And they want continued rate cuts. And that's what they look and say, hey, is needed. And they're just worried, hey, you know what? When there's positive news, then maybe the Fed's not going to do what they, have kind of signaled that they will do. Going forward here. So we have those things kind of, in the mix here. We have the U.S. dollar, the UUP, which, has been pushing into these new short-term highs. It did pull back a little bit here on Draghi's comments, but, still up here near highs. We have gold, which, has been pulling on back, but, kind of just, hanging out here for the last month. Had this big shot up and okay, great. But other than that, been pretty darn flat here. So, can we look at today's action and say, oh, there's a real material change happening in the market and things are very dynamically different? We really can't. We just absolutely cannot right here. Now, was asked yesterday about the VIX. And something that's been going on with the VIX right now. And, if you're unfamiliar with the VIX is what's called the volatility index. Some people call it the fear index. But basically, it is the price of S&P index options, right? And when those index options get more expensive because of the implied volatility on the options, then the VIX goes up. When they get cheaper because of the implied volatility on the options, the VIX goes down. Right. And right now we are in a period where the VIX has been falling, and it's down here around 12. If you look historically at the VIX, and here's a monthly chart, this is a fairly low point, But we saw 2017, 2018. We saw the VIX stay below 12 for long periods of time, even push below 10, 2005, 2006, 2007, right? The VIX can stay low for a very long time, right? Please do not get sucked up into the mentality that the VIX is low, so it has to pop and move on up. But what we tend to see when the VIX gets down at these levels is we tend to see a lot of action on the options, and it's always on the call side, right? Where people are going out and buying call options on the VIX. A lot of people interpret that to mean, hey, the VIX is going to pop, and when the VIX pops like it did here in October, people point and go, oh man, all those VIX buyers, they knew something, right? But that's not the reality. That isn't the reality in most cases. And I'm sure, yes, there are some directional players. But most of the volume that comes into the VIX is hedging. And you think about it this way. If you're a fund manager and you have $500 million in play in the market, and you're squarely tilted on the upside because you kind of have to be, like in this market, are you comfortable at night? You sleeping well at night? Right? You look and you go say, well, how can I hedge? What's the best way to hedge? Well, normally when the VIX is high, it's just expensive. It's a very expensive hedge. But as the VIX drops, the hedge on the VIX gets a lot cheaper, and the reward or hedge potential for it gets a lot better. And so what you see investors, big money managers, just going out and buying call options on the VIX, and they buy them months out. They buy them out of the money just in case they're caught off guard with this type of move right here. Now, most of the time they want those VIX options to expire worthless, right? They don't want those VIX options to pay off because that's going to hurt their fund, right? They're in the upside on a lot of stocks and a lot of different stuff out there. So, they're not necessarily hoping or playing for that to happen. It's a hedge, it's a protection. And so we see the volumes really picking up on the VIX here of late. And you know what? It's just something that we almost always see when the VIX gets down into relatively low levels. And it's something that we see kind of diminish as the VIX moves on up. And so just kind of very normalized action there with it, and nothing that I make too much out of. Is it, yes, a nice hedge? Yeah, it can be a very nice hedge. It's something I've used many, many times over my years of trading. But it's also not the type of hedge I like to use after it is surged because the pricing just gets insane. And so it's something that when the market kind of goes into lulls and especially we're going into August, right? In August, historically, August historically has seen some big pops in the VIX. I mean, even last year, we saw the VIX, go from 10 up to 17 in a matter of days, right? The VIX can make some big pops in August, and so it's just one where, we are seeing that hedging. I can't argue against anybody going out and buying VIX options, right? But understand what you're buying, and that, hey, it's not necessarily a trade where you're saying, well, you know what, the market's just going to melt and go on down. A lot of times it's very much a hedge here. Okay, seeing if I can bring up seasonality of the VIX here, which I guess we could argue is not too relevant. But here we go, 20 years, right? Just back 20 years, you look at the VIX performance, the VIX tends to go up in August, right? Tends to go up in August, tends to, be August, September, tend to be bigger up months here for the VIX. March, April, tend to be down months for the VIX. November, down months for the VIX. And so, there's some seasonality here. If we go back 10 years, right, you see it's even more dynamic. August, the VIX, the average move higher is almost 20 points. I mean, it just absolutely dwarfs every other month, right? And even if we go back, 5 years, 6 years here, 24%. So there's a huge seasonality element here of, hey, you know what? The VIX goes up in August. So, you know what? You see this, you're a fund manager, Yeah, so cheap time. Yeah, it's a cheap time to pick up some VIX calls. Makes a heck of a lot of sense as a hedge, and yeah, it's something that, hey, even for a speculative trader can pay off, especially when you're looking at a lot of this seasonality that is in play, and a lot of the stuff that's kind of going on out there. Possible Iranian situation. If U.S. China trade relations break down, if there's just a whole myriad of things that could happen and could take place. Okay, all right. So that's the VIX. Now let's go take a look at the challenge here. There are no new signals on the board right now. We do have some crossover action happening in a lot of different names. For example, Chipotle Mexican, or excuse me, let me get my list. Sorry, I'm on the wrong page here. Let me grab it. All right, so some upside action in Home Depot, which has a nice little 3-7 upside cross here. This could be a signal here by the end of the day. Whirlpool, which we saw earnings on earlier this week, big old down, and then it is snapped on back, has that upside 3-7 action going on. So, not a signal right here, but could be. Bristol Myers is not a signal. It's coming off new lows, but very positive price action with that 3-7 action. And then AT&T has some 3-7 action, but this stock has moved well over two average true ranges to set the signal, so it doesn't qualify as a bullish signal there. But those are the crossovers on the watch list. Home Depot is the closest to possibly creating a trigger there on the upside. On the downside, we have a few. We have Honeywell, which is interesting after Triple M earnings, but has a downside 3-7 crossover. It's not even close to a trigger. Las Vegas Sands has a downside 3-7 crossover. But coming off of it, you see what the Stoke 39.1 is. It's not even close to setting a trigger. Vulcan Materials, which, gapped on up this morning, pulling on back, has a downside crossover going on. But none of these are signals. And, gold here as well, which also isn't a signal. The consolidation risk is just, really elevated. We saw something like a Juniper yesterday with an upside 3-7 crossover, and it's just the consolidation risk is just very high. And then today, we see it pull on back, and in fact, had a downside cross earlier, but it's rallied, here off of that. So, no new signals to deal with right here. We have two positions on the board. Neither are coming into any sort of stop area. Let's just go update 173 on Bank of America, and with Target, we're at 250. So let's come in and update those. 174 and 250. So that puts the challenge. We're still 2,200 away from that 20,000 level, which would be really nice to hit sooner than later. But still grinding on higher, and grinding on here to the upside. But it has been an absolute grind. This month has just absolutely been a grind. And we got a little pop action in Bank of America after about a 3-day grind. But it sure be nice to see some follow through here to it. We saw Bank of America gap up, and it's kind of reversed a little bit lower here today. But nothing there to react to. And then Target, all signs of ready to bust out, ready to break out. Come on, let's go. Do it already. But, we'll see. We'll see how that plays on out. But nothing to adjust here with those. Okay. Bank of America brings up a conversation that I was asked about. What was it on Monday that I mentioned I would bring up here this week? But it's not rule number 10, but, the challenge setup number 10 right here. Okay. While all trade entries and exits follow the algorithm, Jeff can step in under unusual circumstances and change a trade. There's some interpretation to this, right? Of, hey, you know what? any little trade, Jeff can step in and, oh man, this had a big gain. Now it's losing a little. Should Jeff step in and all of that? And I think one of the things that I need to do here is change some of this language, because I think it's giving an impression that I'm sitting there staring at these stocks, watching them, and waiting for an opportunity to step in and change or alter something. And if you look at the bank of trades here for the challenge, right, which is starting to get sizable, right, plenty of trades here to take a look at. How many have I stepped in and altered or changed or made a different decision than what the algorithm says based on unusual circumstances, right? I really haven't. The only time I've done it is when we've just run into this auto exit date red versus auto exit date green, and our stock price is green, but our option price is red, which has happened a couple of times, right? And that's not even that big of a deal or big unusual circumstance or anything like that, right? But I have not stepped in. I've not stepped in, and I love the Disney chart. I did not want to be out of Disney, but boom, we hit it. Got to go. Under Armour, I even said when we exited, I said, man, this stock's going up nicely here. And boom, it pop, right? So it's one where I have not taken this liberty. I have not stepped in. And yes, can I? Sure. But it's got to be something really unusual. It's got to be something really off kilter. Other than that, I'm going with the odds, right? I'm going with the probabilities. Am I going to trust what I see and what my gut feel is and all of that? Or am I going to trust what the odds and probabilities are? Well, you see the results of playing the odds and probabilities, right? And yes, could I outperform this from time to time? Have I outperformed this from time to time? Sure, I could. But the more I step in, the more I kind of tweak or change anything or use veto power, whatever you might want to call it, the more uncertainty it brings into the challenge. We start to change the odds. We start to change, some of the positive factors that the challenge is built around. Especially this especially this element of, knowing when trades are going to happen. This being able to not have this kind of fear of missing out, knowing, hey, they're coming in at 1 or 2 times a day. That's when I have to look. Other than that, I can move on with my life, right? And so, yes, I understand those of you staring at the market all day, wondering where this stock's going to go in the next hour or two and what's going to be the gap tomorrow, right? I understand that, there are many of you out there, but that's not what I'm doing here with it, and I'm not invoking, number 10 here. Very often, and this unusual circumstances is something that I have to stress. And to me, unusual circumstances is not, a trade went from green to red or red to green, or the option price moved a little bit, right? We've got to see the stock moving outside of parameters, or the stock be halted, or just something of that nature come in, for me to step in. Right? Let's just say, heaven forbid, we wake up tomorrow morning and Bank of America is at 28, right? I mean, let's just say something crazy happened and Bank of America is at 28. Well, what's my option value going to be worth, right? The options that I have on Bank of America are the 29 calls, and those options are pretty much going to go to zero if that were to happen on Bank of America, right? Would I step in at that point? Yeah, I mean, we hit our stop level, and okay, time to get out, but there's no value on the options, so it doesn't make any sense to get out, right? We're not going to lose anything if it goes against us, and all we can do is gain if it goes in our way. So I would step in and alter in that type of situation. But those are the things that's the type of thing that's needed for me to step in under unusual circumstances and change a trade, right? And you're going to see me do it very infrequently. It's not something that I'm looking at and I'm going every day and staring at different trades and going, oh man, this stock was up in the morning and now it's down in the afternoon. What do I do? Oh, should I alter it? No, there's no sense in that, right? It's not going outside of the probability and odds, and let's face it. In testing this, and with over 600 triggers to test this on, there were instances where, yeah, there was a big gap, and it took the option and made it worthless, right? And so that has happened before. It'll happen in the challenges going forward. It'll happen from time to time. But that's the kind of thing that would have to happen to, get me to kind of step in and alter. It's not going to be on the day-to-day flow where, a stock is moving, well within its average true range, nothing really, dramatic going on, even though, yes, I know the option value moves and all of that. But anyway, that's what I wanted to say there about challenge step 10. Now, last year, go take a look at Tesla. Now, Tesla here, down about 12, 13% here on earnings. My take on Tesla. I'm bullish long-term on Tesla, right? I'm bullish, but I'm very cautious, and I don't think this is a great buy opportunity. We are talking about a company with some massive growth historically, but we are talking about a company who, when it comes to the news cycle, it is about as negative as it comes. It is one heck of an ugly news cycle. And so if I'm buying this, longer term, investment, and I don't have a position on Tesla right now, I want to be buying it when it's incredibly oversold. I want to be buying it when it's, dipping below major marks. I mean, we talked about it under 200. This is a pretty interesting spot to step in. But I want to be buying it at those types of levels. Now, I've been watching Tesla over the last couple months, and watching some of the buy volumes that have come in, here on this bounce, and they've been decent. They've been decent. You can see that most. I mean, we have to keep in mind that we're in the summer months. And so this is pretty, they're hitting the average volume quite often. And, that's during the summer months, right? There's a lot more upside volume coming into it than we saw in November, December, February, March, right? The upside volume versus the downside volume is significantly greater. And so that gives me hope that maybe there's a higher low that comes in, right? And at that point, I'm willing to take a little closer look at it. But when we look at it fundamentally, it's not something that's super cheap, but it's also not extremely expensive. It is something that has, very nice revenue growth, but is in a revenue growth lull right here, and that is expected to pick up in the future. So, to see this thing trade down for the rest of this quarter, maybe rally into the earnings report next quarter is kind of what I would expect to see out of it. But for me to want to get in, I want to see this thing oversold. I want to see this thing to an oversold point where the shorts aren't looking to get in, the shorts are looking to get out. The shorts are looking to take profit. And, we're not going to see that on this, just gap. In fact, I think the shorts got a little bit more fodder. This isn't a gap where, the short story is confirmed, and so, okay, the shorts got everything they wanted, now they're going to get out. I think this is the type of earnings report where the shorts got, a little bit better news and a little bit better news to say, hey, their story can play out for a while longer. And so I'm not really interested in jumping in right here, but if we get into a significantly more oversold condition or start to see some sort of higher low come into play, the volumes on this upside have been compelling enough to make me start to look in those scenarios there. So hopefully that helps out. I know that's not an absolute of, hey, it's going to do this or going to do that, but I do think this 260 level is a huge level, and it's one where if we come in, the 260 level was the level it bounced off of in 2018. That was a support level. Busted through this year's, come back, retested it, right? And so to see it, push on down with another leg is highly probable. Higher low could set up a bust on through that. But as it sits, it is something where I want to see that higher low. I want to see that full retracement. Be nice to see it dip under 200 again and be able to, start to pick up a little bit under that level. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon, and we'll talk to you then. Take care.